Now, this video is about a covered call using Thinkorswim. So I'm on my iPad. I'm going to start my Thinkorswim app, and I have my paper money account. Notice how on the right hand side it says paper money delayed quotes, and you could change that through your left hand side, upper left hand side under all accounts. I have currently $210,000 in cash in the paper money account. If you look at my positions, I have no positions, and our intent right now is to start a covered call. And I have no stocks, no ETFs, or no options in the account. On the right hand side, notice the watch list. I have 3 randomly selected ETFs and stocks. I'm going to tap on Exxon. Now on the upper side of the screen you see the current spot price, and then you see the sell price, and then you see the buy price. Now these are the bid and ask prices. Since for a covered call I need to buy an underlying stock, and then I need to write a call against it. Currently I have no positions, so I'm going to buy the stock and then write a call option against it. And I can do that on one ticket. So in fact in this video I'll show you how to do that on single ticket. That will also show you how to use a conditional order. So I'm going to tap on the buy for the Exxon, which is $43.50. I have my order editor. The quantity is selected to be 100. For each contract that I'm going to write a covered call, I need 100 shares. So for this example, I'm just going to go with a single contract, and therefore I need 100 shares. Now this is all well, but now on the same ticket I need to add a call option written against these 100 shares that I'm about to buy. Notice at the bottom of the order editor on the left hand side you'll see a create advanced order. I'm going to tap on it now. Now these are the advanced order grouping. You could have a step-by-step, one trigger another sort of conditional orders. I'm going to tap on add order. Now notice that it actually has a sell order automatically created for me, but that's not what I want. So what I will do is I'm going to tap on that. Now this is the second step of the order. Our initial order is to buy 100 shares of Exxon, and now the second one is suggesting that we should sell that as our second order, but that's not what we want to do. We want to buy Exxon and write a call option against it. I will go down a little bit more, and at the bottom left hand side you see change symbol / option chain. I'm going to tap on option chain, and at the top I see Exxon option chain. Now we see our usual option chain for Exxon for 31st of July, that is next Friday, or coming up Friday. I'm just going to go to a price that I will randomly choose. Since we're buying it at $43.50, I want to sell it at a little bit of higher price with a covered call to generate income, and hopefully if the Exxon goes up we could actually make some money with it. So at the $45 strike, remember this is not a suggestion of trading, this is just for educational purposes only. So at $45 strike, I will tap on the bid for the calls, because our initial order is to buy 100 shares of Exxon, and the second order is to write a covered call against it. So that is 41 cents. I'm going to tap on it. Now in this advanced order, notice the quantity is 10 contracts. However, we are buying 100 shares of Exxon, therefore you're talking about a single contract of a call option. So I'm going to change that to 1. So currently the bid price is 41 cents, so I'm writing it at 41 cents, and all seems in order. I'm going to tap on done. Now notice the green square, it says Exxon buy 100 shares at $43.50. That's a limit order. That's my trigger, or that's my initial order. Once that happens, the second order will take place, and that is to write one contract or sell one contract of Exxon with a maturity call option with a maturity of July 31st at a price of 41 cents. I will confirm this, and then in the order editor now we see both of our orders together. The first one is the order number 1, that's our trigger. We're going to buy 100 shares of Exxon at 43.50, and this is going to start a new position for us, so we're going to open. And the second order after the first one is executed will be to sell a single contract of Exxon at 100 shares, one contract, with a maturity of July 31st. Our strike price is $45, and we are writing this at 41 cents limit price, triggered by number 1. So the cost of the initial trade is $4,350. The cost of the second one is an income, so a credit of $40.35. So if this happens, we're buying Exxon at 43.50, and then hopefully come Friday we're going to sell this at 45, and we're going to have a $1.50 of a profit per share. And because of the premium that we are collecting, that's the 41 cents right now, we're going to be collecting, minus the commissions, we're going to be collecting $40.35. So hopefully we're going to make about $190 of a profit if all goes well. So if I were to tap on paper trade, orders were sent. Well, it's a Sunday, so they won't go through. However, notice the difference of signs. Right now you're seeing that the first one, the Exxon, has a little key next to it, and it says working. So we're waiting for that to happen in order for the other one to take place, because if the second one goes first, then you have a naked call. So in order to avoid having that, you need to have a conditional order. First you buy Exxon, and then next you actually write the call option on it. Obviously, if you owned Exxon already, all you have to do is really just sell or write a call option against it. Just make sure that you are not writing more call options than the Exxon that you already own. So this is how to write a call option with conditional order on a single ticket with Thinkorswim. Thank you.